Hey there, future investor. I'm thrilled you're here to learn about stocks. The stock market might seem scary at first, but don't worry, we're going to break it down together. By the end of this guide, you'll understand the basics of stocks and investing. Stocks are a powerful tool for building wealth. Whether you want to buy a house, send your kids to college, or retire comfortably, stocks can help. But it's important to approach the stock market with knowledge and caution. We'll start with the basics: what stocks are and how they work. Then we'll move on to more complex topics like stock options. Along the way, I'll share tips on responsible investing and managing risk. Remember, knowledge is power when it comes to investing. The more you understand, the better decisions you can make. Are you ready to take control of your financial future? Let's go! Your slice of the company pie. Let's start with the basics. What exactly is a stock? Imagine a company as a big pie. When you buy a stock, you're buying a slice of that pie. In other words, you're becoming a part owner of the company. When a company decides to go public, it divides itself into many small pieces called shares. These shares are then sold to the public as stocks. For example, if a company is worth $1 million and decides to issue 100,000 shares, each share would be worth $10. By buying a share, you're buying a $10 piece of that million-dollar company. Owning stocks gives you several rights. You can vote on important company decisions at shareholder meetings. You might receive a portion of the company's profits, called dividends. In the next section, we'll talk more about how you can make money with stocks. Now that you understand what stocks are, let's talk about how they can make you money. There are two main ways: capital gains and dividends. Capital gains happen when you sell a stock for more than you paid for it. For example, if you buy a stock for $50 and sell it later for $60, you've made a $10 capital gain. Dividends are a bit different. Some companies share their profits with shareholders by paying dividends. It's like getting a bonus just for owning the stock. Not all companies pay dividends, though. Many fast-growing companies prefer to reinvest their profits to grow even more. Dividend-paying stocks are often favored by investors looking for regular income. The beauty of stocks is that you can potentially benefit from both capital gains and dividends. As the company grows and becomes more valuable, the price of your stock may go up. However, it's important to remember that stocks don't always go up in value. This is why diversification, spreading your investments across different stocks, is so important. Stock prices can change a lot, sometimes even in a single day. But why do they change? It all comes down to supply and demand. If more people want to buy a stock, demand, then sell it, supply, the price goes up. If more people want to sell than buy, the price goes down. Many factors can influence whether people want to buy or sell a stock. Company performance is a big one. If a company reports strong earnings, more people might want to buy its stock, driving the price up. Bad news about a company can have the opposite effect. Economic conditions, political events, and even natural disasters can affect stock prices. One important thing to understand is that stock prices don't always reflect a company's true value. Sometimes prices can be driven by emotions like fear or excitement. Understanding stock price movements is crucial for investors. In the next section, we'll introduce a more advanced concept: stock options. Section 5. Introducing stock options. A new level of trading. Let's dive into stock options. Options are derivatives. Their value comes from stocks. They give the right to buy or sell at a specific price. Options are complex but powerful. They allow profit in any market condition, but they carry higher risks. There are call and put options. Call options let you buy. Put options let you sell. Options serve various purposes. Next, we'll explore call and put options. Call and put options. Betting on stock movements. A call option is a bet that a stock's price will go up. It gives you the right to buy a stock at a specific price before a certain date. Put options are bets that a stock's price will go down. They allow you to sell a stock at a specific price before a certain date. Options are complex and risky. Understand them fully before trading. Section 7. The stock market, where buyers and sellers meet. Now that we've covered stocks and options, let's talk about where these trades actually happen. The stock market. The stock market is like a big marketplace where buyers and sellers come together to trade stocks. It's not a physical place you can visit. Instead, it's a network of exchanges where stocks are listed and traded. In the United States, the two most famous stock exchanges are the New York Stock Exchange, or NYSE, and the NASDAQ. The NYSE is the oldest and most well-known. The NASDAQ, on the other hand, is a fully electronic exchange. When you hear people talk about the market being up or down, they're usually referring to stock market indexes. These are like scorecards that track the performance of a group of stocks. It's important to understand that the stock market is not the economy, although they are related. In the next section, we'll look at how modern technology has changed the way we interact with the stock market. Section 8. Modern trading. From Wall Street to your smartphone. The world of stock trading has changed dramatically in recent years. Gone are the days when you had to call a broker to place a trade. Today, anyone with a smartphone and an internet connection can buy and sell stocks with just a few taps. This has made the stock market more accessible than ever before. Online brokers and trading apps have revolutionized investing. Platforms like E-Trade, Robinhood, and Fidelity offer user-friendly interfaces that make it easy to research stocks, place trades, and monitor your portfolio. Many of these platforms offer commission-free trading, which means you don't have to pay a fee for each trade. But this ease of access comes with its own risks. The ability to trade quickly and easily can lead to impulsive decisions. It's important to remember that successful investing is usually about long-term strategy, not short-term trading. Section 9. Investing wisely. The importance of responsibility and risk management. Now that we've covered the basics of stocks, options, and how the market works, let's talk about responsible investing. Investing in the stock market can be a great way to build wealth, but it's not without risks. It's crucial to approach investing with a clear head and a solid plan. First and foremost, never invest money you can't afford to lose. The stock market can be volatile, and there's always a chance that the value of your investments could go down. Diversification is a key principle of responsible investing. This means spreading your investments across different stocks, sectors, and even asset classes. The idea is that if one investment performs poorly, others might perform well, helping to balance out your overall returns. It's also important to understand your own risk tolerance. Some people are comfortable with high-risk, high-reward investments, while others prefer a more conservative approach. And remember, it's okay to seek help. Financial advisors can provide valuable guidance tailored to your individual needs. Section 10. Your next steps. Resources for continued learning. Congratulations! You've taken a big step by learning the basics of stocks and investing. But remember, this is just the beginning of your journey. The world of finance is vast and always changing. Continuing to learn and stay informed is key to becoming a successful investor. There are many great resources available for further learning. Books can provide in-depth knowledge on various investing topics. Some classics include The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malkiel. Online resources can be incredibly valuable too. Websites like Investopedia and The Motley Fool offer a wealth of information for investors of all levels. Many brokers also offer educational resources on their platforms, including webinars and tutorials. The most important thing is to get started and keep learning. Your future self will thank you for the financial wisdom you're building today.